So, welcome to Game Plan Sunday. Today is April 26th. It's the last week of April. So, I expect a lot of action coming into the markets this week, okay? But let's take a look at what occurred last week. So, last week, we had the oil markets crashing, which was crazy. So, that wasn't good for the markets. But then we had a stimulus package that was passed, $484 billion package that was passed. Wall Street really liked that. So any kind of positive news, on the markets, they're going to try to rally, although the fundamentals are not there. We did have some earnings that were actually pretty decent. However, I would say that with the earnings, one thing that they're talking about now, a lot of investors on Wall Street, they're not feeling the fact that these companies, they're providing the earnings, but they're no longer providing guidance. Guidance means that that's the expectations of what they expect to make. And normally when that happens is because things are so dire, so terrible, they don't even want to give it to Wall Street in advance. So that is not a confident sign here in the markets when they stop producing guidance. Okay. And that guidance is really important, especially when you're running financial models and stuff like that. When we building these models, you got to understand we're taking a look at historical data, and then we're also taking a look at assumptions. Where do we get those assumptions from? Well, it comes from the guidance. Okay, it comes from the senior management team and what they're expecting to do. And we take those and we drop those numbers into the models, and that's how we perform these analysis. Well, we're seeing a whole lot of these companies are not even providing that anymore. So that's going to be interesting moving forward as we start to see more companies are adopting that same mentality. And, this is going to be a big week this week when it comes to earnings. Okay. So that's something we got to keep our eyes out for as well. The unemployment job loss it continues to just, it's still terrible. 4.4 million jobs that were lost. We're over 26 million jobs out of the economy. That is not positive, not at all. So then you say, why is Wall Street rallying, right? It's crazy because it's pretty much off of hopes that, we can reopen this economy and they can get this V-shaped recovery, and that's what's happening right now. So last week was a lot of talks, a lot of protests around the country where people are ready to get back to work. People are tired of being hemmed up into the house. A lot of entrepreneurs they're losing massive amounts of money and they're losing their patience, right? So, it's about, survival right now. So just live or die, right? And people not making money. I don't know what's going on with the stimulus packages and things like that. We have been seeing a lot of these big firms have been taking advantage of it, and that hasn't been good. We had Trump last week that was, basically threatening Harvard and, these universities about returning the money that they took because they're giving the free money. So, these companies, they're taking advantage of it, and that's not what it was designed to do. However, it's going to be so many of them that's sliding through the cracks. And so, I mean, it's just not good when the government intervene in situations like this, right? So they're going to get their bailout one way or another. But Trump did, get them to pipe down and got them to give the money back. He had Harvard and Stanford, and I believe Shake Shack gave the money back. I don't think they needed to be threatened. I just think they did it. So that was interesting on the political front. Coronavirus is starting to taper down in New York, but they're seeing that it's spreading in I think New Jersey and Pennsylvania. And so it still doesn't seem like we're going to see a light of the day on this thing. So basically what they're trying to do is figure out a way that we can open the economy back slowly and safely as possible. Who knows what that looks like, right? Nobody knows what that looks like. Funny thing is over the past week, we had the stock market that sold off at the report leaked from Gilead. You remember Gilead was supposed to be developing some kind of drug for COVID, and the markets was rallying behind it until last week, right? And then last week, I guess they made a mistake and leaked the report. Somebody leaked the report that, that trial, whatever that drug was, it's not doing good. So that took a lot of confidence out of the markets. And so it's tricky when you're playing this game. Like we talked about last Game Plan Sunday. It's a little tricky when you're trying to, foresee into the near future because we're trading here. So we're looking at the near future. How can we make some money this week? And when the fundamentals are not aligned, when the market is not aligned with fundamentals or the economy, it definitely makes things tricky. And so you're having a lot of rallies behind hopes, okay? hopes of this, hopes of that. I mean, that's really not a good trading plan. So you got a lot of big investors that's coming out of the market. They're not even participating because it's too much risk. This is too risky. Okay. And the models are pretty much useless right now, because nobody knows, how this thing is going to turn out. We just know that it's not going to be, over. Okay. We just know that it's going to take a couple of years to get out of this actually. So I know I was taking a look at, I was listening to, I think, Charlie Munger, Warren Buffett. These guys are still sitting by, they're not, out here buying stocks. You remember everybody 2 weeks ago, people was like, oh, I'm buying this airline company, I'm buying this company, I'm buying that. I'm like, for what? Just because you see a cheap price doesn't mean that that's the best deal for that stock at this time, especially knowing that that stock can go to zero, that stock can go bankrupt, you know. So you got to be careful with that. We did see some, people that was trying to jump in on the oil companies like USO and got their heads cracked, because they thought they saw a cheap price. And this was last week with oil plummeting. People was like, oh, I'm about to make this money off of oil. And then next, they got their head cracked. It's happening in reality, man. You got a lot of people out here that's just straight up gambling. Okay. We don't want to be gambling. So I try to actually assess the markets with, a sense of certainty, right? And I also understand the risk rewards for anything that I'm looking at. But when things are very uncertain, it makes me scale back a little bit. Okay. You're not running a TV show. You're not running a business. So you don't actually have to be trading every day. And that's what happens to a lot of people when they start signing up with these companies, these guys out here who's running, what are they running? They're running, signals and things like that. They, charge people to, follow my signals and follow my trades and you'll make millions of dollars. What happens to you is that you start to get trained in that way. And so you start trying to find trades every day in environments that's not even set up for you to be trading. So sometimes you got to step back, you got to observe, and then you want to have, better timing, more precise timing and precise, analysis. Right now, things are very uncertain. So, don't be in such a hurry to get in things. Those people are going to feel the pain if they already haven't. So just keep that in mind. Um, what else? Last week I was listening to Carl Icahn. You don't know Carl Icahn? This guy is a heavyweight. Carl Icahn is a extra ultra billionaire running funds. I know he was saying how he lost some money, but he had some hedges on. One of the interesting thing that I was listening to when I was listening to him, because I'm cleaning the house, I'm just listening to him. It was saying how he was shorting commercial real estate. And I was like, oh, that's really interesting, right? Because we talked about how this whole situation may impact or should impact real estate the way that we see it, happening with, the banks are tightening credit right now. Okay. And so with the banks tightening credit, that means that the people that were able to qualify for a home last month, those same people can't qualify for a home this month, right? I think you got to have over 700 credit score at least at minimum, 700 or 720, one of them. Depends on which bank. I know JP Morgan, they raised up the standard. So when they raise it up to 700 credit score, and then also you got to have at least 20% down payment in order for you to buy a house right now. And these houses, the prices are hyperinflated. They're already basically at the top level. So they're too high. They're too expensive. So you got homes, is $500,000 homes. Who has 20% down payment on a $500,000 home? Americans don't have savings right now. So that's important to understand. People don't have savings. Where are they going to get that 20% down payment from on these super expensive houses? They don't have it. And so that automatically disqualifies and take people out of the market that would have been able to buy those homes. Okay. So then you have a shortage of supply of buyers for those sellers. And so once these sellers, because right now we're supposed to get some housing data that come out this week. What's good, Dustin? We're supposed to get some housing data come out this week. But I think the consensus is that the rates, the prices of the homes are still up. They haven't came down just yet, but they are going to come down. Why? Because those sellers are desperately trying to get rid of those homes. They're going to have to bring the prices down just to get people to qualify, right? Because they can't qualify $500,000 home. You're trying to sell it for $500,000, whatever the price is on the house. I'm just saying $500,000 around where I'm at. $500,000. Nobody has the 20%. So then you'll start to see them driving the prices down, and the prices down so that people can qualify. Maybe you drop it down to 350, right? So that's how you get that deflation of the houses, home prices, so that they can try to attract buyers in there. And so and that's just on the the retail side, whatever. but the commercial side is terrible because of all the debt that's in the system. So I was listening to the car icon. He was saying how he said that this is 2008 all over again. It was so interesting. He was actually pissed. It was like nobody understands these, derivatives, that they're offering investors. And he said people with PhDs don't even understand these derivatives. These derivatives are crap. It was like it's terrible. And so he was saying he's been shorting them since last year, and he's made a lot of money. And so I just thought that was interesting. Seeing that a tycoon like this guy was short in the commercial real estate. He's short in the commercial real estate market. He sees more pain to come in here. So anyway, I was just taking a look here at the REITs, and let me see. Let's take a look here at the REITs real quick. And what I want to do is go back. Okay, so I want to go out here, and this is definitely looking like it's going to be weak. What I'm seeing here. Okay, we got this pipe down here. Then it came up to the 100 moving average, could not clear that. Now it's falling under the 200. Okay, so it's making that kind of pattern. This is on a bigger time frame chart, so this is the weekly chart. So with that, I mean, I definitely would like to see some to get into some short exposure here. Seeing momentum starting to drop off and things like that. This thing could support here at this 618. So I definitely want to watch this zone here, and if it bounce off this zone, then scratch the setup. But if it starts to fall, if it falls under that, then I'm definitely going short. So that's the idea that I do like to the short side. It's actually, I think it's a lot of short side ideas that we can probably take a look at here. I was taking a look at this one here, Ball. I don't even know what this company is, but the setup itself looks like it's got like a little double top in there. Let's see. If we take a look here, that setup should go that way. We do have a squeeze that's forming there. We have the trend that's coming down. Okay. Now the thing is, on the stochastics, on a faster when it's starting to come up just a tad bit, but just seeing the rollover on this, then I got the sell trigger here. So I do like this one to the short side as well. All right. What else? That's a couple other ideas. Let me just take a look at the indexes real quick. So right now, as we can see, the futures are down slightly. They're not down bad though. Um, they're not down bad. Just looking at the ES, this is something that's interesting. With the ES, you know, it's trying to push up. Momentum is dying off in here. Okay. Thing about this is that we got resistance up ahead. If you take a look at that 100 moving average, the 200 moving average, all my Fibonacci 618s is right here in that zone. And so, what I'm thinking this week is that we can get this to come up possibly into this zone. So into this zone here, basically, you really don't know. We'll see how it behaves, but I think we can come up into that zone. We come up into the zone and see if it trades sideways to start to break down. It's going to be interesting though because we have earnings this week. So earnings is always a crapshoot. You just never know what you're going to get. So you definitely have to be careful with that. What's good, my man? Crypto man. So I could take a look at the crypto for you guys too. Terry, what's good? All right. So let me move my phone here in a way that I can see you guys. I want to make sure I don't miss you guys. All right, cool. So now I got eyes on you. All right. So this zone here again, because you got a lot of people that's trying to go short, but the market has a way of making the smart look like fools, right? So we may get this rally up in here, but as soon as we get this to this 2900 zone, if we can get to that 2900 zone, then I'm definitely going to be looking for some more shorts in that, if that happens. Basically, we'll see. But a key thing that I want to show you is that just pay attention to, as I'm gonna go through the indexes real quick, just pay attention to the resistance that's up ahead. Okay, so the price is coming from down, so it's a counter trend trade, right? So it's from here, that was the downtrend. It's bouncing up in here. Overhead resistance is up here. So what you typically would see is happen is that kind of situation, that kind of move. All right. So that's the ES. Let's take a look at the Russell. Okay, more of the counter trend situation here. Okay, boom, we hit that floor. It's got to hit this 50 moving average resistance, 100 moving average, and then it's got the 200. So it has a lot of resistance up ahead. Okay, it makes things interesting. Okay, for anybody that's looking to the bull side, this it's a challenging move up. But if we take a look at the Nasdaq, the Nasdaq is definitely in a much better position. Pay attention. Look, our averages are underneath the price, okay? And we're just, we're not even far away from new highs. Now, I don't think we'll get to new highs, but who knows in this environment, right? It's a crazy environment. We know that the economy ain't going up though, okay? And then we know that these stocks, their earnings, we know all of that. That's not happening, right? But it's looking like a little inverse head and shoulders, if you will. Can you see that? Okay. So out of all the indexes, I think that the this index, you know, will be able to move higher. Okay. So long exposure here, if anything, is what I'm seeing. Okay. Just because that's what the setup looks like. And it makes good for a good story. People like stories, people like news, people like positive information. The stock market is symbolic for that. Trump likes to brag about it. A lot of people like to brag about it because it's symbolic. And so, if this thing, comes up, hit these targets, it makes for a good story, right? Because it's a lot of bad news in the markets right now. I think people are just so fed up that any good news would just make people excited, right? That's just the way we see it. You got to understand the stock market is it's a collection of individual humans. It's all of us humans, whether they train robots to do the trading, they're still humans, right? And so you're dealing with emotions. And so emotions is hard to calculate. That's what makes this tricky. How are people going to behave? The biggest thing is that, starting this month, they're talking about, I was listening to Secretary Steve Mnuchin. He was talking about how they are counting on the economy slowly opening up and to slowly recover in the months of May, June, and July. That's what they are. That's what their hopes are. That's what they're trying to do. This is a double-edged sword. Okay, why is that? Because if they open the economy and if things start to slowly move up, then that's good. Okay. On the other side of the coin is if the coronavirus continues uh, to infect more people and this thing continues to get worse, then that's not going to be good. And it's not going to be good for Trump on the election either, because the Democrats be able to pull him apart for his style of leadership. Uh, Being more concerned with the economy and money versus health. So, you know, I think that the health issue is something that you have to be concerned about. Make sure you protect yourself out here. But the parties that's in power, they're going to make this all political objective. So you got to see how the story is going to be played out. Okay. And that still possesses a risk to the economy that people haven't even started looking at. Is in November is the chance that there could be a President Biden, right? So again, that's still at risk right now. I've seen Trump is down in the polls actually, so that's definitely a possibility. And I would hate to be Trump right now. Just listen, that's not one guy I want to be. Who wants to take over the economy? Take the economy through a Great Depression, right? We already knew this stuff was going to happen. It didn't matter which president was going to be in office because of the economy itself. This has been years in the making. It wasn't just one president, two presidents. This has been decades of presidents that's been making this stuff happen, and their financial advisors and stuff like that. Who's running the feds and stuff like that. So they keep on kicking the can down the road. And which is interesting. So let me actually show you guys something real quick. If you guys on the YouTube side haven't joined us, check us out at wallstreetjackboyz.com. I'm going to actually go down my list here on the website. So this is the website. All right. So this is the website. Oh, you guys get an early preview. This is what we're looking at coming up this week. But I know there's some people was asking about this thing here that I posted on my Facebook page about the debt. And so I'm going to share this link with you guys here real quick. If you don't have it, you can actually copy it, save it. I actually have the app on my phone. So, when I'm on Facebook, I'm normally just on my phone, shooting the crap or whatever. But this is a pretty cool app here. And let me just pull it up real quick. So you see what's going on with the economy and everything. So I bought the app. I think it's like $2 or something. So that's all I was saying. Paid a little fee for it because, if you're interested into it. If you're not interested in it, then forget about it. But this is showing the debt in real time. Look at all these numbers that's moving. This is how massive the matrix is. When I talk about we live in the matrix, we live in a matrix, and it's too many. It's so big, and we're so compartmentalized that nobody really has an idea how the whole machine is moving. Everybody's an individual contributor to the whole thing, you know. Um, and so this right here kind of gives you a look at the top down, so you can see what's happening with all the money, the debt, things like that. So there was some people that was asking about that. I don't know what the website looks like. Here's their app thing right here, and the app is pretty cool. I don't know how they do it on the website, but it has a lot of data. Okay, lots of data. And so I'll be sharing screenshots and things like that from here. But it goes into debt, population, it goes into wealth and poverty, it goes into pretty much everything. Presidents, gold, silver, metals. And so I think this is a good resource. Just want to provide that for you guys. Check that out. So that was posted on our website here. Um, and then let me give you guys this one too. This is a good resource as well for you. This earnings whispers, because we're in earnings season right now, so we got some big boys that's going to be coming out this week. So what I'm gonna do is I'm gonna drop this link for you guys as well. So in case you're interested in what earnings are coming up, you can actually just use this, and I'll drop the link on the YouTube side as well. But you can see the earnings. You can know in advance what earnings are coming up. So I'll just go ahead and drop this from my. This is Wall Street Jackboyz website. You guys see right here. You can join. You can join the website. It's actually free to create an account, and the courses again. You have to sign up and register for that. But you're more than welcome to join us. Let's see. What's coming up this week? So we got earnings on Monday. We got CMS Energy and the NXP Semiconductors. That's going to be light work. So we're not really concerned with Monday. But Tuesday, okay, we got 3M, we got AMD, Google, Caterpillar, Ford, Merck, Mondelez, Pepsi, Pfizer, Starbucks, and UPS. So Tuesday, as we can see, is going to be action packed. Okay, a lot of big boys is going to be presenting their earnings, and we're going to learn a lot. So this week is going to be a big week. Okay, this is a big week. Wednesday, it's going to be crazy, right? So you got Anthem, you got ADP, you got Boeing, CME, Facebook, General Electric, MasterCard, Microsoft, Northrop Grumman, Tesla, and Yum Brands. So Wednesday is going to be another action-packed day there. Thursday, we got earnings from Altria, Amazon, Apple, Comcast, Conoco, Gilead, IEX, Kraft Heinz, McDonald's, Twitter, and Visa. So I think Thursday is going to be like the Super Bowl day with Amazon and Apple, Comcast. I mean, it's just going to be crazy. Friday is going to be, I think, I'm a little more on the lighter side. We got some of the oil companies here, as you guys can see. But what's important is that Wednesday, we're going to have the FOMC monetary policy decision. That's going to be, hey, are they going to cut interest rates or are they going to lower interest rates, right? Interest rates are pretty much already at zero. I have the belief that they're just going to keep it at zero. There's probably are some people that believes that they're going to go negative. I don't think they're going to go negative. That would be detrimental. I believe that the markets would just have a fit, okay, and it will poop a brick. So I'm just thinking that it's going to keep it the same. I don't think it's going to be much from that unless they go against what Wall Street believes they're going to do. If they do what Wall Street believe they're going to do, then we shouldn't see much movement in the markets from that. But we will see some movement based off of these earnings. Okay, things are going to be real, volatile because of these earnings. We got the BEA reports, Bureau of Economic Analysis, on Thursday about personal income and spending. So I'll be paying attention to that. It's going back and telling us what March looked like, how people spending, and what your income is looking like. We're looking to see, the sentiment of the people in the matrix, the participants. How are you guys spending, right? You remember the GDP, the economy grows when you spend money. So the whole game is set up and designed for you to get you to spend money. ISM PMI on Friday. So this is the manufacturing reports. You guys remember we were covering this all last year. We was talking about this was in recession levels because it was under 50, and we were seeing a weakness in the economy before COVID. But here you go again. They got an expectation of 36.1 from April. It was actually 49.1 in March. I used to pull up the charts on this because I actually manned that data myself in an Excel document. But I don't feel like pulling it up right now for you guys. But just understand if it's under 50, you're in a recession, you're in a contraction. If it's above 50, then you're growing. So 49.1 was in March. That was contracting. They're expecting for it to contract even worse in the month of April. So we get that data here on Friday. So that's the lookout for this week here. So um, action packed. It's going to be a lot of earnings that's going to be moving the markets. So I think earnings, again, remember we talked about earlier about the companies providing guidance. Wall Street definitely wants that guidance, but Wall Street ain't getting that guidance. So Wall Street might, poop a brick over that. Wall Street is like a spoiled baby. So you got to understand they want that guidance so they can build their models and everything else. And, it's not acting in the complete sense of transparency if you don't provide that. When you provide that, that gives good transparency, and so investors they like that. So but it makes it harder for especially for investors. If we don't have guidance, how are we going to run our analysis, right? This is going to be really really bad. Okay, that's just really telling you how bad things are. All right, so that's what's coming up this week. All right, cool. What else we got here? Let me just move this out the way. I'm gonna take you guys over to the. Let me just cover the VIX real quick because I know we have some people that was asking questions on the VIX. As you guys can see, the VIX is coming down. As you can see, the VIX is coming down, and that's rightfully so. Right here at the level that I was actually thinking it was coming down at. Right here at the 100 moving average. Now we want to see if this thing is going to hold. Okay, we want to see if it's going to hold right here in this area. Okay, it could get pushed down some more, which wouldn't be bad. As this goes down, this is better for the markets. If it goes up, then this is bad for the markets. But it is in that oversold territory, as we see. It's in that oversold territory. So, if it does come down even further, then I got a level right here. Don't expect for it to come down much lower as of right now. So we'll see. But that's the VIX right now. So I don't have any thing else on that. Let's take a look at the gold and silver. Gold. All right. So gold is in an interesting situation here. Pretty much, um, fell a tad bit here in April. The week before, and then this week it came back up. So it's right back at those previous levels. Pretty much looking like it's going to be chopping a little sideways here. Interesting thing is that we had, was it JP Morgan? They came out and last week with the target on gold at $3,000. Let me see if I can pull it up here. Okay, there we go. Let me just go to a monthly chart real quick. All right, so I'm on a monthly chart here, so you guys can see how aggressive this target is. Okay, so you guys remember, when we was talking about buying gold, it's because of all the economic conditions worsening. Gold is the thing that just makes sense. Most people don't understand gold, and so that's why they're missing out, and they're trying to buy stocks that are, getting downgraded and they're junk. Okay, they got junk bonds and all that stuff. Stocks getting downgraded. But gold is going to do what gold is supposed to do. Okay, which is to go up. It's taking a little time, which is interesting, but it's going to do what it's going to do. But anytime you get a financial firm, a bank like JP Morgan, Bank of America, who it is, I made sure I put that in there. They got a $3,000 target. Okay, my Fibonacci targets ain't even that aggressive, right? I was already, looking at the 2000, around 2000. I got about 2200. So this is my targets here. Okay, so my targets here, right? 2200 to 2500, basically. You could just say somewhere around 22 to 2500. That's my targets. But these cats came out with a $3,000 target. Okay, I found that very, very interesting. So I made sure I put that on my chart because I want to make sure that we keep this in place for a future point of time where we'll see if gold actually hits that target. Now, again, this ain't gonna happen in a week or so, but they're expecting for it to hit this, probably, within the next year. Okay. Um, So it just depends. As uncertainty piles up, then gold is definitely going to continue to uh to move north. So um I do like it there. I think that we're starting to consolidate just a tad bit here. Let's go to the smaller time frames. I think that we're going to probably bounce around this area, around this target, the 1700 target. You know, uh, in this zone here, basically. I think we probably just chop a little bit more around here. But we'll see. That's just what I believe. And you guys know silver's following suit. If you looking at the silver, yeah, I think that silver has some more up room. Also this zone up here, this 100 moving average, is where I see it set on silver. So um and then last week we talked about the dollar, and then I'll take some from you guys after I finish this. So we talked about the dollar here, and the question is the dollar going to move up or is it going to move down? I will pull up my side by side chart, but we did that last week. So if you didn't catch that video, make sure you go back and catch last week's video. We actually went over the dollar here and basically saying how this thing is going to be critical. All right, we had a buy trigger in here, and which basically tells us that this is supposed to go up. However, it has this overhead resistance, which makes that tricky. And so we're actually going to find out what this thing is going to do this week. Are you going to bust a move or are you going to mildew? Like my mother, she always says, you're going to barbecue or you're going to mildew. We're going to find out this week if the dollar is going to barbecue or mildew. Just looking at the charts here, we do have the trend going up. We got momentum shifting the opposite direction. And so we may have enough juice to push this thing up. Now, if this thing goes up, that is not going to be good. Um, it's not going to be good on the equities markets. And weird things we've been seeing gold, the commodities been following the equities, are just weird as well. So we'll see how that goes. If it goes down, then that's good for equities. If it goes sideways to down, then I think that's good for equities and everything else. So still continue to keep our eyes on gold. On the dollar, the U.S. dollar, but you know, the trend is going up. Okay. And so again, this is going to be coming from overseas, countries overseas. They got their debts and all that stuff is, denominated in US dollars. So they're trying to get that dollar. They're trying to get their hands on this dollar here. And so that could drive this, that normally should just drive this up as they race to get dollars to cover their debts and everything. So yeah, so that's another interesting story in itself. With that being said, I'll take a couple from you guys and we'll bring the session to a close. All right. Okay. What you guys got for me? Anybody got anything that you want to take a look at? We got Xavier wants to take a look at eBay. Let's have a look here. While I'm pulling this up, man, what's interesting? I guess I'll pull it up after here. It's the situation with Netflix. I had an interesting question here for you guys. Um, So he wants to know my thoughts on eBay. So let me just clean my charts out because like it's a while since I took a look at this here. All right, so the situation on eBay, if we take a look here, Xavier, this is a double bottom setup. Okay, the move is already over. So it would have been ideal for you to get in this bad boy right here at that buy trigger. Okay. It is above its moving averages, which is putting it in the positive zone. But typically, what I would like to see on that is for it to come back to its come back to the mean. It's going up too high. Let it come back, which it'll drop on one of these lines here, and then see if it consolidates and it starts to make another move up. Then I'll look to get into something like that long. But this setup is already came and gone basically. This is a clear as day double bottom setup pattern. You do have earnings coming up ahead, so just keep that in mind as well. But it did, do good with passing this strong level of resistance, and so that ceiling, that one ceiling, should now become its floor. Nothing took the weekend away from the chart. Okay, yeah, there's nothing wrong with that, Ron. Man, you got to got to get in with real life. We're all humans, and things are real drastic. So nothing wrong with you guys taking a break from the charts. Stock market is not going anywhere. If anything, it just keeps going higher for no reason. You take a look at the weed stock that we're looking at, Canopy. Okay, so canopy. All right, so let's pull these extensions out of here. Oh yeah, we do have a squeeze on this one here, which is an interesting play. And this is a counter trend trade, so you just want to be conservative in your approach, but it does have a squeeze, and so because it has a squeeze in there, that make it an interesting candidate. Let me pull that up. All right, cool. So we have a squeeze here. The trend is still up. The fastest stochastic is still up. We got a buy trigger right here. Um, it has been trading sideways under its 50 moving average, but because it's squeezing here, it looks like it should explode above that, but we don't know how far it's going to explode. I do like it to the upside, but pay attention to that 100 moving average, which is a key level of resistance, and then 200. So I don't see it going no further than $21 basically, probably around $20 or so. Um, it's a counter trend trade, so just make sure that you put your loss, your stop loss or whatever. Just make sure you manage your risk basically with this here because it is a counter trend trade, so it can go the other way easier. It has more resistance up ahead. But the squeeze maybe give it enough movement to push through. But I do like that for that. Now, the interesting thing about the weed stocks is I'm not too sure how they are, positioned to go through this crisis and dealing with demand. Last time when we caught the weed stocks that were coming down, a lot of them were, basically over leveraged. To start this company, they had a lot of debt, and so we started seeing all of this going down and that's not good for them, especially with the economy going the way it is now. And so just thinking about that, that's still negative for this industry. So you'll probably see companies go bankrupt, if anything. So but this one here may be a better position. I haven't taken a look into the fundamentals on it, but I do like the technical setup on it a little better. All right, cool. So we just did eBay, Xavier. Hope you got that. I just did that. And then we just did CGC. Um, anybody else got anything else you want to look at? And Xavier, make sure you catch the replay if you missed it. I just actually went over eBay. What else? Anybody else got anything else you want to take a look at? Another thing is that was interesting, man. I was thinking about had some short ideas on Disney. I saw some reports on Disney talking about how they were actually supposed to be closing down for the remainder of the year. I mean, this is really not good for them. And the only thing positive for them is be if they can open back up, but I can't see that happening. So, for that reason, I am still short here on a weekly chart. Boom, came up to the 618. All right, now we've seen it come down again. So that's another interesting idea here. It isn't a squeeze, and so we don't know the direction that squeeze is going to go in, but the story is just more bad than good. If they can't open up, how they making money, right? So um, just thinking about that, they can't put no money, can't make no money. That's got to be bad for them. So we'll see. Oh, my question. This is my question. Okay, it was Netflix. All right. So my question was Netflix, right? Because my wife and my daughter they watch the Netflix. I don't watch TV, right? I watch movies, but I don't watch Netflix, right? So you guys be trying to get me to watch Netflix shows. I don't watch them. But if it's a movie, I'll watch it, right? Um, but the interesting thing, this is a question I'm gonna ask for you guys. Y'all help me to understand this, okay? Because I know Netflix has been popping. We had new highs on Netflix. Everybody's at home. Um, Topaz, you just stole my question. How you gonna steal my question? I wanted to know, okay? After you guys are sitting here watching Netflix and you watch all the good movies, okay? Then what happens, okay? So because if they're not producing any movies, okay, they're not making any movies right now, then this whole vibe up cannot last forever until so Topaz said they're not releasing anything until 2022. Okay, interesting. So I didn't know that. That's good. So they're not releasing nothing until 2022. So pretty much everything is basically out, I guess. Not too sure. But after you guys finish consuming all of what they have, then what do you do? Do people stop watching it? Because I know people don't like watching stuff over and over again. They start getting irritated and agitated and getting crazy. But that's an interesting question I just had. I was just thinking because my wife and my daughter, they be watching these shows. And just taking a look at it. I know Netflix is popping, but how long can the rally last? Interesting thing here is that Netflix does have, a squeeze play on the monthly chart. So this is an interesting situation. Don't know if it's going to play out, but typically what we see is that the squeeze push this thing up higher. But how high will it push it though? That's the question. And so with this monthly squeeze, these things when they kick off, they normally kick off for weeks, excuse me, months at a time. But I'm not too sure. When I asked that question, it kind of pushes me away from this particular setup because of that. You guys can see this is an easy double bottom setup, right? Has the setup already completed? With the squeeze in there, it could take this thing up here on a monthly squeeze. So just want to bring that to your attention. I do see that monthly squeeze here, but you guys understand that all squeezes do not, pan out. Some squeezes fire duds. So this could be a setup to get us caught up in some ish for the future that you may not see. So anyhow, if you're looking at that for some long exposure, uh, you know, be quickly on that. And you got a squeeze forming in here, but just be quick on that. Um, because I'm just not too sure how long people are going to stay glued to their TVs watching the same shows, or over and over again. So anyway, those are my interesting thoughts that I had here. Um, oh yeah, I got to get verdict. That's right. And Pastor Key had the showdown tonight. So yeah, got it. Yeah, that's my godfather. He raised me, so that's my man. So we're gonna check that out. So yeah, we'll go ahead and bring the session to a close, man. I appreciate you guys joining us. Make sure you check us out, WallstreetJackboyz.com. Share the videos, like the videos, subscribe, help us get popping on these social media feeds so people can get this money. All right. So you guys enjoy the rest of your week. Be safe. Peace.